Today in this video, I'm going to break down a very simple concept that helps you make great decisions regardless the time of day, regardless if you missed a move, regardless if you just had a losing or winning trade, right? I'm going to teach you the main foundation of my trading strategy, right? And that is the foundation of pit numbers. Pit numbers were derived from the pits of Wall Street from way back in the day, before there were computers, before there were any bots or trading algorithms, right? Traders traded off pit numbers. Large money, banks, institutions, financial firms, they had four main price points from the previous day. This is previous day high, previous day low, previous day open, and previous day close. And now I get a lot of traders asking me why I'm constantly talking about these pit numbers, and it's because they hold all the liquidity, all the volume. You guys need to understand something. Large money can only make money when you lose money. I want you to think of a seesaw, right? A seesaw cannot go up without somebody going down. And on the contrary, seesaw cannot go down without somebody going up. It is a relationship, right? It's almost a mutual understanding, right? So for every time large money makes money, there has to be somebody losing. And on the flip side of that coin, every time someone's losing, there has to be a winner, right? This is the market auction. This is how it works. This is how price action is generated, right? So the pit numbers come into play because they have so much volume. Large money is trying to make as much money as possible. Therefore, they need to accumulate all the liquidity that's possible. The liquidity is at the previous day high, low, open, and close. There is tons of amounts there, right? So I'm going to show you in this video how I use this information to help me make better decisions in the market, right? And for anybody that wants to get involved with our team, click the links below. I'm doing something new for traders where I am sending out high-level summaries, right? This is monthly data reports on our strategy, right? My goal is to help traders build massive confidence in the market, and the only way to do that is by collecting data and reviewing the data, right? I'm giving those away for free, so click the links below, get affiliated with HPT, punch your email in there, and I will send you these high-level summaries for free. For any other trader that's trying to take it one step further, really learn our edge, really build that confidence, control, and conviction that's needed to become a consistently profitable trader, Trader Bootcamp gives you 12 months access to our Discord team. This will not be going on much longer, but I think it's very important to teach traders, show them the principles, and then demonstrate the principles for them on the team, right? So join Trader Bootcamp, one-time payment, 12 months access, right? That is the two best ways to get involved with HPT going into 2025, right? So without further ado, let's break down the pit numbers. So before you are going to see a chart, very simple, very easy and repeatable way to approach the market, right? And this is what I do each and every single day. Everybody on my team knows how to do this. This is the best, most easiest, effective, simplistic, systematic way for you to identify high probability setups, right? So we have the pit numbers in front of us, right? We have previous day high, we have end of day, and we have previous day low, right? One more I'm going to put in there real quick is going to be previous open print, right? And these levels are very important, like I said before, for one reason, right? They're not magical, they're not special, they've always been on your chart, you just didn't notice them, but the reason why they are significant is because the volume, once again, the liquidity. Look at here at open print, right? Look at that candle. Massive amounts of liquidity, right? Same with previous day low, same with previous day high, and same with end of day. There's massive amounts of liquidity here. Therefore, large money would rather get that liquidity, right? They're trying to make as much money as possible. Therefore, they need to gather all the orders possible, right? Because once again, zero-sum game. When someone's winning, someone's losing. But for somebody to win, someone must lose. Right? This is a very important concept that helps us make better decisions. Why? Well, because it shows us where to watch. It shows us areas to get in, areas to target, areas to stomp out at, right? And if you miss a move like we were talking about before, it's okay. You just need to target the next pit number, right? So let's see how this played out. So we have our four main price points. Now we just need to identify who is in control, right? So the market opens up. You're going to see here, look how close previous open print and open print are, right? So open print is the 930 print that pops on the market every single day. Why is it important? Look at the volume, right? There is a higher than normal volume here. There is a vast amount of volume, liquidity going into the market, right? If chart patterns represent human behavior, right, and we need to understand what large money's doing, it is very critical that we learn to spot this at these levels, right? Because the liquidity's here. This is where large money's making their move. If we could identify a chart pattern here, that gives us a way higher probability, right? This gives us a massive edge. What is the definition of an edge? It's when there's a higher probability of one thing happening over another, right? That is the definition of an edge. So that is what you need to do and spot each and every single day. So we have previous open print, right? We have open print right here in EOD. Notice here, just watch price action. Just let it unravel. Let's see the story that it tells us. So price opens up, it respects the 50 EMA, and it rips past open print and previous open print, right? So now, price is rallying right up into end of day. Look at here, large money, taking this liquidity and ripping it up to EOD, closing that pre-market gap. What happens here? Sellers come in, boom, try to push the price down, right? So in my mind, I'm constantly watching this, going to watch the battle, right? Buyers land the uppercut, boom. Sellers dodge it, boom, right? Like I'm constantly, who's in control? Who's taking control of the market? Who has dominion over the critical levels? Because if I can understand this, I can then either make a move targeting previous day low or previous day high, right? So I've done vast research. I've collected vast amounts of data, and I've done insane amounts of research where I understand that there is an 88% chance. There's an 88% chance that whoever controls open print is going to push price to the next critical level. What this means is whoever controls the open, right, it's either going to go up to previous day high or it's going to go down to previous day low. I just need to understand who's going to do it, right? This is the power of data. It helps you make way better decisions. We call them data-driven decisions, right? If you can learn to understand that there's an 88% chance, if buyers hold the end of day, there is literally an 88% chance of price gravitating all the way up to previous day high. This is called the market imbalance. This is what large money does each and every single day, right? It's up to them to gather liquidity. They need to grab it off these levels, right? So now I just wait patient to see who is going to control the level. Now look at here. Sellers push price down, buyers come in and rip price above EOD. So say you were late and now you just got in front of the market and now you're watching price action and you're like, oh man, I missed the morning move, right? Or whatever it may be. Now price is rallying above EOD. What do we know here? Well, we know that buyers have just showed a lot of strength and owned all these critical levels. So now let's bring it back to that 88%, right? So once large money takes control of the open in EOD, now I know there is an 88% chance of price gravitating up to previous day high, grabbing all of this liquidity. So now I need to find a way to get into the market that's not going to cost me a lot of risk, right? So now I'm going to whip out the Discord because I want to show you guys exactly where I got in the market and what I was looking at, etc. Alright, so if you come over here to the Discord and Spy Alerts, you're going to see, and once again, this is for all my premium members. Everybody on my Discord gets access to this in live time. Right, so at 11:23 a.m., you're going to see in-longs here targeting previous day high. Right, so let's whip over to the chart and figure out exactly where that was and what was going through my mind. So that's going to be when the market looked like this, right? And now I want to show you guys, this is the 5-minute, let me whip out the 2-minute. Because once again, once I have the understanding of price action, I understand the story, now it's up to me to get in the market with appropriate risk, right? Now look, you can't just go long here because you're like, oh, buyers held end of day and Josh told me there's an 88% chance. Yeah, there's an 88% chance of price going up to previous day high, but you need a repeatable approach that's going to protect you, right? That's going to mitigate risk, right? You need a way to get in the market that's going to be highly effective, right? You can't just hop in the market. Look at this candle here. If you just hopped in the market, you would have gotten smoked on that candle, considering you had a stop loss in, right? So you need to be patient. Price is rallying. I'm sitting on my hands patient because I need a way for me to get in the market that's going to help me manage risk. How do I do this? I look for retests off the critical levels, right? Look at how price rallies, rips back down into end of day here, and then rallies back up. Look at the liquidity. Look at the volume here. I can't make this up. Literally, volume when we break end of day, then we rip past EOD, get a massive sell-off back into it, and we literally have 400,000 shares being traded in 2 minutes, just like that, right? And this is how large money moves. Once again, it's up to them to gather all the liquidity they can and make moves off it, right? So once I see this at 11, right here, 22, right where I said I was going long in the market, is at 11.23. I'm in longs targeting PDH. So this is what the market looked like when I was entering long targeting previous day high, right? So, but when I do this, I need a way to manage my risk. This is why I use the red bar and green bar ignored approach, right? I find a red bar that's just been ignored and I put my stop right below it. This way I have a great way. Look at, I'm literally risking 30 cents here to capture a move up to previous day high, right? 2-minute cloud is holding very well. End of day was just respected. Buyers defended the morning, right? Now I have a great way to get in the market, very simple way with a very simple target being previous day high. Look how price rallied, reversed, but never broke the low of that previous candle. So then we end up capturing a great move here up to previous day high, right? So once again, guys, the goal of the pint numbers is to give you a simple but effective way to identify opportunity in the stock market, right? Don't be the trader that's just ignorant, that just assumes price is going X, Y, Z. No, figure out a way to actually understand the market dynamics, the market story, and more importantly, the market auction. I hope you guys like this video. Make sure you hit a like, send it to somebody that needs it, join my team, and I will see you in the next lesson.